Welcome to our comprehensive guide about credit cards. Today, we'll dive into the world of credit cards, discover their features, advantages, and how they impact our financial health. Ever wondered how this small piece of plastic can affect your purchasing power, credit score, and financial planning? Let's get started. Credit cards are issued by banks and credit card companies, allowing you to borrow funds to pay for goods and services. The issued card comes with a specific spending limit, and the user has to repay the borrowed amount, along with any interest, by a specified date each month. This process is called the billing cycle. Borrowed money isn't free. When you delay or fail to pay back on time, the issuer charges an interest referred to as an annual percentage rate, APR. The APR varies among different cards and is determined by the creditworthiness of the cardholder and market rates. Some cards also have added fees like annual charges, late fees, and foreign transaction fees. Credit cards can either be a blessing or a curse when it comes to your credit score. Regular payments can boost your score, while late or missed payments, along with high credit utilization, can negatively impact it. It's always essential to manage your credit wisely to protect your score. Credit cards can be a very useful financial tool when used responsibly. They can help build a credit history, provide reward points, and offer certain levels of purchase protection. Remember, make sure you understand the terms thoroughly before getting a credit card and always pay on time to avoid unnecessary charges.